Another week in the Seattle real estate market. Hey there, everyone. My name is Brennan Klaus, your favorite Seattle area realtor. And this is your weekly market watch for the Seattle area real estate market. Today is Wednesday, August 13th, and we have some good news today. Mortgage rates have continued to stay close to 6.5%. So if you have been following along at all, you know that mortgage rates were a lot closer to 7, sometimes over 7%. Earlier this year, we saw back in December of 2024, they were over 7%, and into January, they were at 7.1%. Those dropped, but have now dropped even further to this week. They started at 6.56% for a 30-year fixed rate, and now today they're at 6.53% for 30-year fixed. 15-year fixed is at 5.9%, and 30-year FHA and VA are 6.11 and 6.12 respectively. So that is good news because it means that buyers can afford more. So their monthly payment when interest rates come down lowers because the money costs less, the interest is less. Therefore, they can spend more money if they choose to, basically, or their monthly payment goes further. Let's say your monthly payment at a 7% interest rate was $5,000. Your monthly payment at a 6.5% interest rate for the same price house might be $4,800, for example. That's obviously hypothetical. I just made those numbers up, but it gives buyers a little bit more power to purchase something either at the same price and have a lower monthly rate, or at a higher price with the same monthly payment. That's good for the real estate market because it brings more buyers into the market. It allows more buyers to actually be in the market and be active making offers. That said, we are not seeing the market shift a ton yet. A lot of people believe, or a lot of things that I've read, is that it will take to get around the 6% interest rate in order to unlock millions of buyers across the United States who will then become active buyers and actually start making offers. That said, we have seen mortgage applications continue to go up, which is a sign that buyers have started their application for a mortgage, and that definitely indicates that there could be more buyers in the market in the future. Let's talk a little bit about what happened this week. We had one buyer who got in contract this week on a detached additional dwelling unit, or DADU, in North Seattle. They got some credit, a little over 1% credit from the seller on that. They came in with a really great and strong offer. That was actually after we lost out on a previous offer on a very similar home that had a competing offer. And so buyers are out there. It seems like things are happening. We also made another offer today for a new construction home, asking for the seller to basically buy down the rate, do a temporary buy down, which is called a 3-2-1 buy down or a 2-1 buy down. And so we'll see if that gets accepted. But all of this to say is that sellers are willing to negotiate right now, especially on that surplus of new construction homes that we are seeing in Seattle and broadly in King County. That gives you a little idea of what's going on in the market this week. Now let's talk a little bit about the market numbers and what came on the market this week. So when we look at condos for the past 7 days as compared to the previous 7 days before that, we saw 180 new condo listings. That's down 1 from the week prior. Pending listings went up by 15 to 188. So an increase in that pending listing inventory. Now that 188 exceeds the number of new listings at 180. That doesn't mean necessarily that all of the new listings in the past 7 days went under contract. Just means that some of those existing listings are now getting bought up by buyers being put under contract. And sold listings was down by 10 at 113 for this week. So we don't see a big drop in the inventory, which is a little bit surprising for middle of August. Usually in August, we see that inventory start to come down. And most likely, based on historical data, we will see another influx of new listings right after Labor Day in September. Now, when we're looking at residential homes for Seattle, this is townhomes and single family homes. That is what is included in residential. We see an increase of 36 new listings this week as compared to the week prior at 476 total new listings. Pending listings is up by 18 as well at 551 residential homes going under contract as compared to 533 last week. And then sold listings were down by 30 at 365, down from 395 the week prior. So 551 homes going under contract this week. That exceeds the number of new listings at 476, similar to what we just talked about with condos. This doesn't mean that all 476 of the new homes that were listed are now under contract. It means that some of those may be under contract, but more than likely, a lot of the existing homes that were listed weeks prior are now going under contract. But this shows that the inventory is getting bought up quicker than it's coming to the market. And so that shows that for buyers, there is still some competition out there. You have a lot of choices still when you look at the market, and you have the ability to negotiate, but people are still out buying and they're taking up what's already listed. So be aware of that as you come into the market. If you are a seller and you're thinking about selling this fall, it's never too early to have your free strategy call with myself and our team and talk about your goals, because oftentimes it can take months or more to get your home ready for market if you want to get the best ROI. And if you're a buyer thinking about getting into the market this fall or starting your search, we'd love to have a strategy call with you to talk through your goals and what you ideally want to accomplish and how we can help you with that. It's never too early to start that conversation as well, so you can start looking at homes and get into the market and see a little bit about the market dynamics firsthand before you actually decide to purchase. Thanks for tuning in this week. We will see you again next week for your next Seattle Market Watch.